Welcome back to Ferocious Education. This is Zed. Today, we're going to be talking about one that we're familiar with, CEI, going to name Camber Energy. In this video, we're going to dive a bit towards due diligence, technical analysis, and what has changed in the last week or so. So without further ado, let's jump right into this one. So Camber Energy. We did talk about this one a few times before, and the latest news comes on October 5th, after basically a very dry season of no news. This one on October 5th actually references a short report that was issued by Questrade Capital regarding basically a short selling report that it was actually mentioning some things that might be true, others that are far-fetched about this company. Now, this one here, they actually mentioned that we're not involved, nor do we comment on the day-to-day trading of the companies of the common stock. I can say, however, that our business relationships are legitimate and that we firmly are committed on improving the organization capitalization and executing on our growth strategy. With respect to the company's public filing, our objective is for the company to become current on or before the expiry of the initial cure period establishment of the NYSE, the New York Stock Exchange, which is on about November 19th or 2021. So basically, they will go ahead and talk to the SEC as well regarding this. But anyway, there might be additional details regarding the timeline of the company to file such filings to the SEC, especially as well. That was one on May 24th, 2021. Now, if you do recall and watch some of my videos before, we did talk about some of the previous reports that they said there was some issues with them and they're fixing it and they fired their accounting firm. But anyway, we have our hands on this short selling report. It's by Questrade Capital and it's talking about CEI. Now, some of this might be very obvious. So back when they did it, the price was around 3 times as much. So the price over sale was around 1,500 and the price over book was around 30. And some of the things that they talk about here are a little bit far-fetched and bending the truth a little. Some others, such as talking about the number of convertible preferred shares and how people were exercising their warrants and converting their shares. That is something that is totally expected with each exponential run for any stock. So this is not a CEI thing, but they were also talking about how way overvalued this company is in terms of the different prices and everything in between in that sense. And it's talking about the actual real value that Viking has with actual capitalization. The funny thing is, people who've actually took a look into CEI before through my videos would have recognized that what is true in this paper and what's not. And what's true is this is a momentum play. This was not the next Tesla or the next big massive company. There was basically a very easy guy that people wanted to go for. They initially said, hey, we're going to $1, then $3, then $4, then $5. And it was very clear onto that, and it hit the $5. And I started talking about what happens after the $5 is actually met. And I said, well, people are going to actually start selling coming in towards $5. The people that were telling you to buy have probably started selling a bit of $3 and then a $5. And that was always kind of the anticipation that it would drop. Now, the short selling report, the only thing it did was kind of escalate this a little bit further with a lot of panic. So they kind of initiated it. Now, let's take a look into some of the short selling activity to kind of get an idea on what happened. So the short shares availability are still very much the same, around 550,000 shares. If you were to take a look into my last few videos, which by the way, talking about that, if you would like to see more of these videos, make sure to click the subscribe button on the bottom right corner and leave notifications on. Also, don't forget to drop a like, and you can join our Discord, totally free. We're not trying to upsell you on anything on there, and you can join the discussion. But basically, you would have seen that the short shares availability was somewhat roughly around the same what it is right now. The big difference is that the short borrow fee rate has plummeted down to 9%, meaning that institutions themselves are comfortable having people take a short selling position. Now, in terms of the total volume was around $426 million yesterday on the 5th, on the time of the report. Around half of that was going on towards the short volume. So taking a look into the ratio, this has been somewhat on par with what you've been seeing in the last month or so. So for instance, take on the 28th and the 29th. It's seen 61 and 56% respectively on the short volume percentage. yesterday was only 50%. Again, I'm not talking about, or I'm not trying to just basically bash anything out. I'm only laying the facts and you get to decide. So in all retrospect, people who are short selling this or didn't really need a report to justify their short selling. But the short selling report, the only thing it does is induce panic selling. People actually read this and go, hold on, I was trading it on momentum. This does show that this is fundamentally overvalued, which is, again, based on these statistics, it's kind of true. And it kind of shines a light on that and people start panic selling and everything tumbles over. And that's exactly what we've seen. So we'll talk about what happens next. But in terms of institutions, we see that Versha Financial liquidated around 3 weeks ago, and institutions have been very, very quiet about this one at this point. Even though we have different companies like Vanguard Total Stock Market Index Fund Investor Shares, which got 1.1 million shares, and it doesn't seem that there's much difference happening here or any kind of change into that position. On the other side, insiders haven't really moved any of their positions for the last 2 years, so there's nothing to comment about there. Now let's move on towards technical analysis and discuss a little bit further about this one. Now for the technical analysis, I'm not going to bore you a lot about the indicators in this video and everything in between because it's going to be very obvious that this went from bullish to bearish. Now there's a few things we need to take care about in terms of describing in general. So first off, the trend here is obviously an inverse cup. And that in its own is bearish, but this is again based on news and panic selling rather than some kind of radical momentum movement. Well, I mean, yes, that triggered momentum movement in the wrong direction, but that's just to keep things in mind. The other thing is the trading action zone is between 261 and 179. That's where you're most likely going to expect some reversals, but currently we're way below that at the 114. We basically erased almost all gains that we've seen in all of September. And in terms of the average directional index, that's retracting, and momentums and MACD have gone towards a negative. Stochastic fast and stochastic slow are both suggesting you might get another day or so of red. And in terms of the moving average bands, this one is expected to trade between 229 and 187 on the bottom, but you get to see that the volumes have dried up significantly back, suggesting that a lot of the people who are panic selling already sold. So what does that mean? Well, in all retrospect, it means that we might actually start seeing some kind of pulse back into this one. But first, let's talk about the Fibonacci retracements. The first resistance is at 140. Above there, 206, 259, 312, 388, and 485. Current support is at 33 cents. The reason why I'm going on Fibonacci retracements is because high frequency traders and institutional buyers use it. You get to see some of these points, especially the 140 was critical. Now, on normal supports and resistances, currently we have a few. So let's go back for the last month on a 1 hour perspective. And what we get to see is that there is a current significant support around the 110. Below there, it's 106. Going down to 97 cents, 92, and 85 cents. Honestly, if it does reach 85 cents and then 70 cents, you might easily see 40 cents right after. Because at that point, momentum would be really, really strong. Resistance at 132, 143, there's a lot of lines here for resistance. 167, 186, above there, 229, and then going to 260, above there, 297, upwards to 337, going upwards to 360, and 403 upwards to around 439, and then 485. Now, if we were to take a look into, let's say, the last 3 months, there is some supports that you might be able to see closer towards the 70 cents, as I mentioned, below there 48, and then down to 33. Comes to the question to Ed, what do you think is most likely going to happen here? So obviously, there's multiple things that happened. So first off, a bunch of people bought around this, and I proved it before. And they waited on a little, started boasting it or really promoting it on social media, on their profiles, saying, hey, we're going to $1, then $3, then $5. And then they start selling around 3. As you get to see around 3 here, you start seeing a bit of hesitancies. Around $5, they probably sold around $4.50 or something. You know, they don't sell just one price target. They're telling you a price target, they probably sold a little bit before then. And then that's where the next day, after it hit the 450, most likely some of the closer people towards these social medias that are pushing it and retail started selling around here, the short selling report only hit around here. So it was already on the downwards. These people just on the short selling report wanted to escalate this further and take that negative momentum and escalate it towards panic selling. So what's most likely going to happen is that you're going to get 1 or 2 days another of red. And then slowly it's going to be, hey, the same people that sold around here will try to get another ride out of this. They'd be like, hey, they attacked us. They're trying to get the followers back. Oh, a lot of people, a lot of poor souls lost money because I guess they didn't sell at the $3 price target. And even though they said 5, 7, 9, whatever. And they're going to try to push this one again. If successful, what you're most likely going to see is they're going to start pushing it right after it meets a bit of accumulation, because currently it's a falling knife. You don't want to push a falling knife. If you have something that is going downwards fast, you're trying to push it, you're basically only going to get a horizontal line. So first you're going to see a bit of accumulation perhaps early next week, and they're going to try to push it a little bit further, up to $3 or so, maybe $2. I'm not sure what the new price target is, depending on what they say. And then it's probably going to reach half of that price target and then drop back. But be very careful. Your positions are very valuable, and only use for these kind of momentum plays what you're willing to lose. But what do you think going on with this one? Mention what happened to you down below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.